The broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody, and welcome to our webinar today, titled Help People on Their Financial Journey to Universal Credit. It's great to have so many of you here on the call. Delighted with such a great response, which I think is a testament to the subject matter and indeed the guest speakers. So while we're just waiting for a few more people to join us, I'm going to take you through a little bit of housekeeping just to familiarise yourself with the GoToWebinar software that we use. So, as I say, a little bit of housekeeping. So what I'd like you to do is in the panel on the right-hand side of your screen, you should be able to raise your digital hand, which will allow me to carry out an audio check. So if you could do that, please, that would be great. Thank you very much. And also just to let you know that in the same panel, you'll be able to ask your questions for the speakers. So please pop them in the box there as and when they occur to you, and there will be time at the end for asking questions. There are a few polls and throughout the webinar, and we've got a survey at the end, very short survey, I think maximum 5 questions for feedback, and we'd be very grateful if you could give us that. We aim to have you on your way by 11:30 this morning. Excellent, thank you. So today's agenda, I'm going to go take you through some introductions very shortly, and we're going to talk about the just a little bit of background and where we are now with Universal Credit, and we'll have a poll to take your views on the budget, the announcements from the budget. And we're also having Zoe's going to talk a little bit about the rollout of Universal Credit and just some of the policy and strategy work there. Then we're going to hand over with Peter talking with Andy Jones and Molly Dunne, our guest speakers today, and we're delighted to have them with us. And then Peter's going to talk a little bit more in depth about the software. It won't be enough, I'm sure, and he's just going to whet your appetite. So there is the chance to ask for guest access at the end so you can have a look yourself. So for those of you who may not know about Policy and Practice, just very quickly who we are and what we do. Policy and Practice, we were founded to help people towards independence by making the welfare system simple to understand for both people and organisations, and to help people towards financial independence. So we know, of course, that the benefit system is complicated, and different government departments administer a range of different benefits, all with their own rules and always updates at different times. Complexity is the middle name. So we're a policy-led software and consulting business, and we've got 3 services that we have developed to make the welfare system simple to understand. Our modelling and our analytics services, but our software services are what we're going to be covering in depth today. Okay, so without further ado, it gives me great pleasure to introduce our speakers. Andy is going to be joining us shortly, but on the call we have Zoe Charlesworth and Peter Carter from Policy and Practice. Zoe, Peter, do you want to say hello so we can hear your voice?
Good morning, everybody. Great to have everybody on the call. We're looking forward to today, and hopefully you are too. Thanks.
Excellent. And Molly Dunne from Your Homes Newcastle. Do you want to say hi, Molly?
Hello there, everyone.
Lovely, thank you. Okay, and Andy will be joining us shortly. So without further ado, I'm going to hand over to Zoe, and Zoe's going to talk about the Universal Credit. Zoe.
Yeah, thanks, Janet. Good morning, everyone. In this the start of the webinar, I'm just going to have a quick look at where we are at the moment with Universal Credit, especially in the light of the budget last week. And then I'm going to share some of the knowledge that we've gained at Policy and Practice about the challenges that this creates, not just to organisations, but to claimants themselves. And as a little bit of background, we've gained quite a bit of knowledge through the policy work we've undertaken on all welfare reform, but specifically Universal Credit. We've been very involved in consultations with DWP, as I know many of you have as well. And we have a lot of organisations who are using our support tools from a variety of sectors, and who are in different places in the migration of claimants over to Universal Credit. But most importantly, our calculator that is used by many organisations to support people to Universal Credit is actually on the gov.uk website. And through that, we have a live chat and help function. And we're gaining a lot of knowledge on the challenges and anxieties for claimants. So hopefully if we share some of that with you, it'll help you in your support for your particular customers. If we just look at the Universal Credit roadmap that's on your screens at the moment, just before the budget, I think universal credit had been rolled out to about 8-9% of the totality. And we're expecting all people to have migrated by March 2022, and that, as you know, has been pushed back and back. And most of the flags you'll see on this roadmap are around things that were announced in the budget. But we do expect there to be other changes. The areas that first moved over to universal credit were extremely useful in the feedback they've been able to give to DWP and allow some of these adjustments to have taken place. But as it moves onto people who are perhaps more vulnerable or with different challenges, we do expect to see further tweaks as we go along. So let's just have a quick look at the budget. Can we have the next slide, Janet? Is that? I think it's just coming up. There we go. Yeah, a lot of you will be aware of these. I'll just quickly cover them for those that haven't had a chance to catch up with the news. Short-term benefit advances have been amended to cover 100% of a UC award. As you'll be aware that up to now this was 50%. So they've been extended. The amount somebody can have as an advance or loan at the beginning of the claim has been extended. And this is going to be introduced bit by bit. In December, they can have, this month, they can have 50% of their full UC award within 5 days and 50% at the beginning of January. And from January, they'll be able to get 100% of their UC award at the start of claim. And I think this staggered is just to get the guidance out. And if we look at the timetable for this, it's obviously a regulatory change, merely a guidance change. And because of that, I wouldn't expect that this 100% award is applicable to everybody. We're waiting to see the details, but benefit advances are not available to those who are already paying loans up to the level of maximum repayment. And the increase in loans does take, for some claimants will take them above the regulation amount that's possible to reclaim, the 25% for those not earning and 15% of personal allowance for those earning. So I think this is a maximum. A lot of claimants will be able to get 100% award, but I don't think that this is for every single claimant. Waiting days, the 7 days waiting days have been abolished from February 2018, and I think nearly all the organisations that had put in submissions ahead of the budget had asked for this, so we're very pleased to see that. And I think that's probably in February, merely because regulation may be required there. From April 2018, housing benefit will be extended to an additional 2 weeks at the end of the housing benefit claim. And this took us by surprise. It's really welcome. I'm sure for all the landlords out there, it's extremely welcome. It basically means there's barely a break in claim, that they will get a further HB payment 2 weeks after their UC claim starts. Although then they will get their UC payment obviously 3 weeks later after that. So your gap in rental cover is really just a week. And that isn't a loan, that's an additional payment. So it should really help this problem of arrears and evictions that we've been seeing and threatening in the private sector. There's going to be changes to temporary accommodation, and those, especially local authorities out there, will be very aware of the problems around this, in that the housing situation and housing element is based on the residency on the last day of the assessment period. Well, for many temporary people in temporary accommodation, they're in and out of the temporary accommodation before the end of the assessment period, and that leaves the local authority footing the whole bill for that accommodation. I think initially this looks like it's going to be just left with local authorities to carry on housing benefit for people in temporary accommodation, but that might not be the final solution that they come up with. It might well be that they have an interim assessment period for people in temporary accommodation and they do eventually move over to universal credit. One that's very welcome by all landlords is the assumption that current payment arrangements will stay for those migrating over to universal credit. And the interesting thing here is that this is for private tenants as well as those in the social rented sector. And this was made clear in a question in a reply to a question in when David Gork gave his statement. So I'm thinking that this is probably going to just be a guidance that if somebody has already these arrangements in place, they will automatically be transferred over unless they ask for them not to be. We know that the rollout timetable has slowed down until after April, and that's obviously just to get all these things in place. And there are a few other things in the budget that really aren't so much to do with universal credit. So what are the implications of these for both organisations and claimants? We'll move on to the next slide.
Okay, Zoe, that's coming up now. I think what we were going to move on to now, Zoe, was the poll, actually.
Okay, let's have a poll. Yeah.
Let's have a first poll. Excellent. Okay, so let me select the poll and serve. So everybody, what you should be seeing shortly on your screen is a poll that we're asking about what you think about the announcements about universal credit in 2017, and hopefully you can see that on your screen right now. So the poll is asking you, and we'd like your opinion. What do you think of the announcements about universal credit in Budget 2017? And you can see the answers there on your screen. Please choose one. And just while you're doing that, what I'd like to say is that Policy and Practice would like to give a big thanks to everybody in our Leading Lights network who fed in to our briefing paper to DWP before the budget, and we're delighted that a lot of the changes that we proposed to DWP as a result of that input actually came to fruition. So we're also, Devon also was giving evidence at the Select Committee last week, and we're going to give more evidence shortly. So we do want your further views on universal credit, so please do get in touch and tell us what you think, if anything needs to be done. I don't want to presuppose what you're putting in the poll here. Yeah, so we're going to give more evidence. We're going to do more briefing papers to DWP, and we'd very much like your opinion on that. So all my waffling, you've been voting. Thank you very much, everybody. Some very interesting results. So let me share those details. I'm going to close the poll now and share the results with you. Hopefully you'll be able to see that on your screen shortly. Excellent. Zoe, do you have anything to say on those results?
Yeah, I think that's exactly what I've expected. There were some things that were needed fixing straight away from the feedback from those who'd already moved over to universal credit and from the knowledge of organisations who deal with people on the front line, especially the 7-day waiting. But the extension of housing benefits still doesn't supply people with money to live on and pay utilities during that 5-week wait. And although the advances have been extended, you're also extending the amount of time people will have to live on a reduced income. And benefits are not easy to live on anyway. If you're reducing it by 25% of the personal allowance on top of that for up to a year, that can be really tough on people. I think that we will see more changes as universal credit extends to different client groups. And obviously, the impact assessments that the DWP has produced are now being shared with the Select Committee. They're not going to be made public still, but at least they are now sharing them with the Select Committee. So I think eventually we'll have a lot more information about what's required to make universal credit fit for purpose.
Thanks, Zoe. So I think this was a slide you're going to move on to before I jumped in.
Yes, sorry about that. I just wanted to share some of the information that we've had from various organisations. And we ran this webinar, must be about 6 months back now. And one of our guest speakers said the first lesson and the biggest lesson they've learned, and the message they would like to get out there to everybody, is that however long you think you need to prepare, you need longer. And if they could have gone back and done it again, they would have started preparing for universal credit earlier. I'm not really going to talk about preparedness from an organisational point of view, because we have our guest speakers, Molly and Andy, who'll be talking about their organisations and what they've been doing shortly. But obviously the organisational preparedness needs to be in place for you to prepare your clients. And work with clients seems to fall into the categories we've got here of identifying who needs support, engaging with those people, and providing them with the information and support that's required. Move on to the, I'm happy to move on to the next slide, Janet.
Okay, coming up.
First of all, we're going to look at identification, how you identify who's going to need support. For some organisation, you can be proactive in this, and I'm thinking particularly about local authorities because they have very, very rich source of data in their SHEBI returns and in their CTR data. And that allows them to be able to do some data analysis to work out where they should be targeting support. And it's useful if some sort of targeting or identification can be done prior to UC rollout. And I know organisations that have done this have found it extremely useful. And obviously the targeting will depend on what your objectives of your organisation and the type of organisation you are. For other organisations, apart from local authorities, this is very tricky because they might not have the data to enable this type of analysis, although we are seeing a lot of partnership working around this. But for a lot of organisation, there's just going to be reactive identification. For some organisations that offer broad support, I'm thinking like charities, citizens advice, you're going to be providing support to those who contact you. For housing associations, it'll be a trigger that will activate support. We're introducing a triage module into our calculator to assist local housing associations with this. But every organisation will have different triggers, whether it's a rent payment missed or whether it's end of direct payment. It's just important to get these things decided before the universal credit rolls out. And yeah, we can move on to the next slide, Janet. The amount of support you will need to give to clients, one of the lessons we've learned, and this is particularly from feedback from the gov.uk website. In fact, we're the only calculator on the website that has live support function, which means this is a really rich source of information for us, and not only allows us to give support on the front line, but it actually informs very much what we know about the level of support required. And we're probably seeing that green block you're seeing in the middle. They're the ones we're talking to. And for some clients, it's very little support. They don't need a lot of support, but they might have one or two questions. And once those questions are answered, they're happily going ahead and managing their own claims. We're probably not hearing from the 30% who require no support. We know there's vast numbers using our calculator. And the vast majority of these are not getting in contact with us. And from their feedback, we know it's a useful resource. And I think perhaps just the knowledge of what their universal credit will be and some of the advice and pointers about how long it will take for payment are all that group need. The group we're probably not seeing, and a lot of the organisations that are on this webinar will be seeing, is that 20% of clients require a lot of support. We do hear from a lot of these, and they take up an awful lot of our time. They have very complex problems. But if you can provide support to the 30% and the 50%, it allows your experts, your welfare benefit advisors, to concentrate on that 20% who require a lot of support. So let's move on to look at the key issues that we're finding that claimants have. And firstly, it's knowledge of the system, and I don't think this can be stressed highly enough. For those people who don't need a lot of support, knowledge is everything. They can adjust their budgets, they can plan, but just going into a gap before payment with no idea of what will be at the end of it. For some people, they actually need to know the why before they're happy with it. And you will end up with a lot of people moving quite seamlessly to universal credit if they can have that knowledge. Errors in assessment seem to be another issue, and if you can deal with knowledge to your 80%, errors in assessment and the support they're required, Your staff who are your welfare benefit advisors can start focusing on that. So any tools or resources you have to assist people on their journey to universal credit need to be in depth enough to be able to highlight if errors have occurred. We don't expect the level of errors to carry on at its present level. DWP took on a lot of staff very quickly. They're all increasing their knowledge. Things are way better now than they were initially, and we expect that to improve. Monthly payments are causing a lot of problems. And this is where people have other weekly income and the UC is calculated monthly. And this isn't just weekly earnings, and the whole of the retail trade is usually paid for weekly. Most bar work or that sort of work, hospitality's work, is paid weekly or fortnightly. So this is a lot of people on low incomes are receiving weekly payments. But also a lot of benefits are paid weekly. So people on contributory based, which is now called New Style, ESA and JSA, and carers, they're trying to fit in those other benefits with the monthly payments of universal credit, and that can make budgeting very tricky for them. Landlord payments, I think, has more or less been sorted through the budget announcements. We're going to have to wait and see how that plays out in practice. I know that the trusted landlord status has made a big difference, and so we're sort of monitoring if that carries on being a problem. The 6-week wait, which is now the 5-week wait, is still a problem even with the advances. The advances are just really delaying and putting the problem of having low income further down the line, because that's a large chunk of very basic income that people will be losing in paying it back. And I know a lot of organisations are actually advising their customers to not take those advances if there's any way they can possibly manage without them. And so what we'll have to see, we'll have to see what the response is to the early, the increased short-term benefit advances, and more importantly, the impact of paying that back. But the main issue I've got here is who to contact. There's problems with contacting benefit centres. So some of the organisations on this webinar will be the only people that claimants feel they could go to. That there are difficulties getting through to benefit centres, and on top of that, for many people, a face-to-face conversation is the most. It really helps engagement and understanding. So it's going to be a lot of work for frontline organisations, because with housing benefit being reduced and eventually disappearing, that sort of generic advice that housing benefit officers used to give out alongside housing benefit advice will no longer be there. The work coaches JCPs won't be giving benefit advice. The government has announced that it's going to be working closer with CABs in the hope that they'll be putting more money into advice there. But it is still going to be a lot relying on the frontline organisations, the local authorities and the housing associations. I just want to also mention here before we move on is that these are the sort of knowns, but there's the known unknowns, if I can call them that, in that there are various other issues that we're now seeing as being problems, and we expect to see as causing changes in universal credit in the next year or so. And these are around free school meals. At the moment, that's been extended to everyone on universal credit. We know there's a consultation suggesting a cut-off. I think it's about 9,400. But obviously having a cut-off goes against the whole point of universal credit, that there's no cliff edges. So a lot of organisations, I know a lot of you, and we ourselves will be responding to that consultation. So we expect to see changes there. Free prescriptions, is worth knowing, is a problem for your customers. There's cut-offs there that are trying to emulate the cut-off under the old passported system. Those cut-offs are slightly different to the free school meal cut-offs. But the problem is the prescription forms do not have the tick boxes for universal credit. And so people have the advice to give to claimants or customers who mention this is that they have to write on the back of the prescription forms that they're getting universal credit and sign it, and that their income is below the cut-off. I'm sure that will be sorted out. We'll hear more about that in the future. We're almost certainly going to hear more about self-employed, merely because there's such, and the minimum income floor, because there's such powerful lobby groups associated with some of the industries and jobs that are wide, that use self-employment just as a matter of course. For example, we've got small-scale farmers, fishermen, carers, all these. We're probably going to hear an awful lot about either having whole groups taken out of the minimum income floor, or some sort of adjustment of the minimum income floor to recognise part-time. And the last one is around issue that I think we're going to find out a lot more about in the coming year, is about surplus payments. And I don't know how much people are aware of this. It's the most complicated regulations in universal credit, but it was supposed to be introduced in April 2018 and it's been pushed back. It's basically where if you start work or you suddenly get an income and it's higher than, so you move off universal credit, you're supposed to retain that additional income above a certain level, because if you go back onto universal credit, your benefit will be reduced. And that will have huge impact for all the organisations out there that give budgeting advice. It will have an impact for housing associations who are hoping that once people start work, they can start paying off arrears. Because the first thing people will have to do is put aside money for when they go back on universal credit. But there's lots of questions being asked about the select committee around that. So my view is it might well not happen. Yeah, we'll have to wait and see. So let's move on to how you can help clients prepare. I'm not going to talk about this a lot because our guest speakers will be talking about how they've done this within their own organisations. But it's just to emphasise that if you can have some self-service tools, that'll stop that will mean that your welfare benefit advisors and your experts can concentrate on helping those who need a bit more support. So it's just important that in preparing, you're looking at those who can help themselves and those that will need some sort of advice support. And on top of this, we mustn't forget that some people will always need help with budgeting, and this is absolutely, yeah, it's extended under universal credit, not just because of the wait for payment and the impact of the advance reducing universal credit, but it's in looking at how weekly earnings and weekly benefit income fit in with the monthly universal credit. I'm going to pass on now to Peter, who's going to, and we're going to actually hear from two organisations who are going down this path at the moment, and we'll hear a lot more about how their organisations prepared for universal credit.
Thanks, Zoe. That's great. Just very quickly, Molly, you're here, aren't you? You're online.
I am, yes.
Great stuff. Andy, are you there?
Yes. Hi there, Peter.
You
Can you hear me? I am. I've been listening for a while. Yeah. Very interesting.
For those of you who don't realise, there's been a lot of, it's been like a swan this morning. There's been a lot of stuff going on under the water. That's great. Anyway, listen, thanks very much, both of you, for joining us. You've obviously both experienced in terms of rollout and supporting your clients. Let's start with Andy first. Obviously, Andy, we had a bit of a conversation yesterday. You've been using the calculator in a number of areas and supporting your tenants in a number of areas. Would you like to just go through what the main area is, which I think is your tenancy sustainability team?
It is, Peter. Yeah, really, we like to start off on a strong footing, really, with any new tenants that are coming in to the borough. So 2 weeks before they're actually, they get the keys to the property, we do what's called a pre-tenancy appointment. The budget calculator features very highly in that process. So we like to do the affordabilities, the cost of running the home, and try and educate people in terms of the income and expenditure. So the budget calculator is extremely, important to us. I think it's fair to say within that team we do a lot of work for tenants, probably because of the homelessness and the other issues that we've got as a local authority or like an ALMO. We also continue to do a raft of other things, but that team really deals with cases through the pre-tenancy process until 13 weeks into a post-tenancy period. and by which time then we're hoping that most of our customers then, are accessing the calculator properly, and that they're able to manage their affairs and run their introductory tenancy, which they will have until they move into a fixed term.
And presumably you're supporting tenants on both universal credit and under the current benefit system.
That's right, yeah, that's right. I mean, we've got a mix of people in different areas, but in terms of universal credit, it's extremely good because it's giving you the calculations there as well if there's a shortfall. So people are obviously abiding by that. We're also looking to roll this out into the money advice team, where temporary accommodation customers are dealt with to actually assist there, and also the arrears team, although that's minimal at the moment. So the pre-tenancy side and post-tenancy are the main sort of areas in terms of the calculator at the moment.
Great. Molly, I think you were talking about when we had a brief conversation yesterday that the arrears is quite important to you, or certainly in the income team. Is that am I right on that?
Yes. So in terms of how we've been using the calculator, it really has been in a response to universal credit rolling out in Newcastle. So we had live service from spring 2015, but we've actually had full service from May 2016. So we were really aware that we needed to get our frontline income recovery staff upskilled really in knowledge in terms of how to calculate entitlement, what to advise customers. So I would say that they're the main service that use the tool. And then in addition to that, we are actually fortunate enough, we do personal budgeting support as part of the local arrangement with the DWP. So we have staff co-located within our job centres, and though they would use the tool for those personal budgeting support sessions as well. So it's really been a very helpful tool for our organisation. And sorry to go on again, but the further aspect where it's very helpful is you can save those cases. So we have a lot of people who move in and out of temporary work, 0 hours contract, and it's really helpful for the frontline staff to have a case saved and be able to put in those fluctuating earnings and be able to give people advice almost prior to their UC award to explain what they may need to make up from their earnings until it's almost too late.
Brilliant. One of the things that I picked up on when with both of you really when we were talking is that, when we talk about the calculator, we focus very much on the benefits to the residents, to the tenants, and so on. But you found the tool useful in terms of managing the information about tenants as well. Is that right?
Yes, absolutely. So like I say, if someone comes into that first appointment, which we tend to give them when they move on to universal credit, we can kind of confirm their household circumstances, record any additional benefits they may be entitled to, any other kind of income. And then it's quite helpful in that if they then kind of return with any further issues or a change in circumstances, there's not that repeated information gathering, and it's quite a quick activity really for our frontline staff to give them an understanding of what their income's going to be that month. Brilliant.
One of the things that I thought was quite innovative of what you were doing, Andy, in Solihull was around residence evenings and bringing the residents in and giving them the access to the calculator on tablets. And I know that certainly was something that you were doing a little while ago. How did you find that, and how accessible did you find and useful was that?
We found customers could use it a lot better than what they first envisaged. I think there was some reluctance at the start. And I think that's probably evidence in our assisted sort of digital support, where referral numbers are very low. So in terms of the returns that we give, we haven't done particularly well then. I think that the sort of general consensus of opinion here anyway is that people can self-manage a lot better than we first thought. And I think the calculator and what that does, probably evidences that.
Great, that's brilliant. Thanks for that. Just a final question to both of you, really, and that's around for people who are moving on to universal credit in the next weeks, months, and so on. What advice would you give to an organisation that is yet to roll out universal credit full service? And what do you wish you'd known beforehand that you now know?
Well, I think from our perspective, we didn't envisage probably that full service would have escalated at quite the levels it has. We've gone from a caseload of 10 cases a month in live service to 150 now in full. Whilst we feel we've got a lot of tools to help combat that, it's just the sheer magnitude of it, and the big issue for us as a landlord is the housing benefit losses that result from that. We're struggling at the moment to collect the volume of income against the reduction of benefit. That's something we're starting to see improve through the third-party deductions, and we are looking at direct debit channels any day of the month and a raft of other things that we're trying to put in to boost our income. But that's a defining point, really. I think also under the actual live service, we had one devoted officer that could contain the caseload there because the numbers were low. But I think the fact that we've had to train so many people quite rapidly as well, given the rollout, and I think when you look at the migration triggers, we've probably realised about 2 or 3 months before we went into full service that more cases would actually migrate than we first thought. So that might be something to look at in your partnership meetings, and it's something really to be careful of.
Molly, what about yourselves?
Yeah, I would agree with that. I think for our experience of UC Live Service, similar to what Andy's mentioned there, we had a small team dealing with those, but we had about a year's lead-in before it went to full service. So within that time frame, we were kind of working out our internal processes and what training we'd need to do. So in some ways, we were fortunate to have a bit of lead-in, and we did kind of very quickly realise we needed people upskilled and the front line. So again, I would just say, like we mentioned previously on the presentation today, it's about getting prepared and not underestimating the volume of staff that you'll need to kind of even just deal with those initial inquiries coming from customers, because it can be a confusing time for people not knowing quite which benefit they should be claiming. So you want to make sure that their contact with you as a housing provider is beneficial and it's directing them in the right way. Another thing I would just touch upon in terms of what we wish we'd known, I just need to be aware of the move from live service onto full service. The alternative payment arrangements have been paid differently under full service, which isn't always necessarily raised. So it was via BACS transfer on live service, so you pretty much got the payment around the same day as the tenant. It's a couple of days for it to be transferred over to us. But with the full service, the manner in which it's paid, it comes through on a 4-weekly basis.
Sure.
So again, that's a very practical bit of advice, but it's something that we weren't fully aware of until, well, in all honesty, a couple of months into full service, when we suddenly thought, well, hang on, where are these payments? So it was really something which, on a practical sense, is worth knowing from the beginning.
Right. Well, thanks very much, both of you. We'll probably come back to you if there's time at the end. But Janet, if you could put the screen over to me just now. What I'll do is I'll just have a quick run through to show people the calculator that both Andy and Molly have been using. Show my screen, press the button. Hopefully you can see my screen. Let me know when you can see my screen, Janet.
Yeah, I can see your screen. I hope everybody else can.
Yeah, there'll be a few people wishing they couldn't. Anyway, let me just run through the calculator, and hopefully we can do things. This is the front screen for the calculator. I just wanted to quickly show you around the screen. There's the current situation is here where my mouse is circling, which is where we're going to keep up to date with what's happening on this particular case. For those people who haven't used the software before, there's a tour that you can do where we guide people around how to use it. But I'll just skip the tour there so we can show people where things are in terms of what you're seeing and doing. And there's always the ability at the bottom here to ask questions of our team back in Westminster, who are always ready to help either on policy questions or on usage of the calculator questions. So that's the thing that Zoe was mentioning, that is available also on the .gov version of the calculator. So what I'm going to quickly do is just show you that we can create a very simple calculator. So I'm going to talk about Phil. He's 1978, same age as myself, obviously. When did the benefit claim start? I can hear people giggling in the background. People know me too well. And then we're going to say he's single, and he's got 2 children, both of which are they're twins, but one's male and one's female. There's no other adults in the household. If there were, then we could put that information in. If there was disability in the household, it's very strong on disability. We can put all that information in. But because of time this morning, I'm not going to go into all these details, but we can put all the information in that affects policy and affects people's benefits that they receive. As soon as we've got all that information in, we can just go straight through to enter policy property details. I'm going to put in an address I used to live at, don't live here anymore. Oops, 2SY, and I can put that information in. I can say what kind of property it is. Well, I'm going to, for the sake of argument, I'm going to say the property is rented from a council or a housing association. It's a 3-bedroom property. Sorry, a 3-bedroom property. And for those of you who understand the benefit system, you'll understand why I've done that, because we can talk about the under occupancy rule a little later. And the rent is £110 per month at the moment. Sorry, let's put that per week at the moment. Various other bits of information about the property, and of course one of the things we would want to put in is council tax, and we can start saying that the council tax in this particular area where I live on the Wirral is £79.52 per month. So all of that goes into here, and as you'll see on the right hand side, the situation is being updated in the current situation in terms of what people are entitled to and what they're going to be able to survive on after costs. I can then start entering information about income. Is this person, is Phil in work? Yes, he is in work. Is he self-employed? For the sake of argument, no, but obviously when we do that, we take into account things like minimum income floor. Hourly, he's paid hourly. He's on £8.50 an hour, and he works around 14 hours a week. And then other information about all of this that you might want to put into here, childcare costs and so on, other income from other places that could go into here. But for the sake of speed, I'll just move on. If anybody's got any questions or wants to have a look at it in more detail, then I'm very happy to show you.
Yeah, Peter, yeah. Sorry, I think you missed. I think you've got that person on £0 an hour. Sorry, I just.
Did I mess it around? Sorry. Yeah, you're right. How did I do that? I'm sure I put £8.50 in. These things happen when you're a novice like me. So we've got him on £8.50 an hour. We just go straight to reports and budgeting, and we can see actually he's much better off than he was, having taken up some work. We can see it now. We can see the information in terms of the results, and we can see the high-level results here, and we can also see it for the current standard system and for universal credit. A couple of things I'll just highlight here very interestingly for you while you're looking at it. And I know that obviously screens take a little bit of a while to upload as you're viewing this through the webinar software. Under universal credit, council tax support is 0. Under the current benefit system, council tax support, which is on this line here, I don't know if you can see it yet, it's just updating, coming through, is £58.12. If you are from a local authority, one of the things we are doing, as Zoe I think alluded to earlier on, is we are doing analysis to make sure the council tax reduction schemes, which are discretionary for local authorities in England, are set to the levels that you want them to be set at and are supporting the right people. So if you want to have a conversation about that, let me know. But one of the things we can do on this is go into more detail about this. So how is the housing benefit made up? We can click on here and have a look at the high-level view so we can see exactly what it is. And we can see reduction due to incomes and savings, reduction due to number of bedrooms, and so on. But we can have a look at that in more detail. So we can do an expert breakdown of how Phil's housing benefit is calculated. So this is a very easy way for people to see and to judge how what income they should be getting, what benefits that they should be receiving, and therefore what their current financial position should be. When we start doing that, we might want to say to Phil, you know, would you be better off if you took up more earnings? And we can just click on here and we can suddenly see this is £8.50, £14 an hour. And if he was to move up to 24 hours, he'd be better off by £176. And very easy to see the visuals on that. So we can quickly work with Phil. So if we are in employability and we're trying to get people into work, then this is a very easy way to judge that. I'm just going to click on to one I prepared earlier. All good demos should be take their lead from Blue Peter, I always think. Here's one I prepared earlier. Because in this particular one, I've also got information about budgeting. And as you see, we've got the same level of income, but actually after costs, they're a lot worse off. And one of the things we can do is in budget, we can put all this information in, and I just didn't want to waste time showing you the kind of stuff we could put in. So utilities bills. So we can see under utilities bills, Phil has told us he's on £110 per month. He didn't know what his electricity was, so we've used an average figure. The average figure allows us to say, well, we don't know what you're on, but you're probably spending about this in a property like you are. And we've got things like transport costs and so on. In having put all of this kind of stuff in, I can now work out whether you're in cash surplus or cash shortfall. And I can see that your cash shortfall a month is £120 per month. I can also show him where his potential savings are likely to be. And this just takes a moment to load. So I can look at the possible savings on personal items or compare costs with similar households and start looking at where average costs would be. He could save £430.67, and given that he's £120 a month worse off, that's clearly going to be of benefit to Phil if we were able to do that. One of the things he might want to do is look at that level of detail for his own budget. So we ask a number of questions, which I won't go into now, but I can show him his own budget and print this out and let Phil have it, so he can go away, look at his income, and work out where he should be making savings. This is just creating this live online for you now, and they're able to see this kind of level of information that would be of interest. All figures are shown monthly. Still creating the budget, so we can start seeing where his incomes are coming from, where his outgoings are, and so on. So it's just building that up. And that's able to be printed and put into the system. We're finding that because this is a fairly new feature we've got in the software, and we're finding those people who are using it are finding this exceedingly useful in terms of preparing people for the changes that may be coming in their circumstances. A couple of other things that help people change their circumstances and get control of where they are is if we look at reports page here and on universal credit, we've got a universal credit calculator. One of the things we know is income doesn't remain constant under universal credit because of the way in which it's paid. So let's just fetch the income details here. We've already said that Phil has got some income coming in. He's got some earnings. What we'd like to know is, which day does your universal credit assessment start? Well, let's say it's the 15th of the month. When was it last paid? When were you last paid your income? So I'm going to put that as the 30th of the 11th, 2017. And now I can generate a universal credit calendar, and this calendar will show us that actually his income isn't even for every month of the year, but it's calculating it so we can now have a look at when he's going to have dips in income. For some reason, I've done something wrong.
Yeah, Peter, you haven't put in how often he's paid, if it's weekly, fortnightly, or 4 weekly.
There you go. That's me trying to rush. So there we go. If we put that in to say fortnightly, and then generate it. I should have gone on the training course, Zoe. It would have helped, wouldn't it? Training courses, by the way, are bundled into the software. This is almost subliminal. But you can see in December, he's going to be receiving less income. So the month when he wants to have more money, because December is quite an expensive month for most families, he's actually going to be over £100 a month worse off, £150 worse off, as in June next year. And again, for planning and for understanding how universal credit works, people are finding that's a very useful feature. Another useful feature.
Can I just say something there, Peter? I think that what people are also finding extremely useful about it is that where their weekly income means they get 0 universal credit for a month. So as Peter was showing, it goes up and down. Where it goes to 0, to remind people to reapply the following month, because they will have to re-trigger their claim. Otherwise, they won't get any universal credit for the month after when their income goes down.
Yeah, you're absolutely right. And I should remember to say that every time, but you're the policy expert, so there we go. One of the things that's useful to do is to say to Peter, actually, you are still in £51.54 cash shortfall. What can you do about that? So I'm just going to pick up a couple of, so I can add a scenario and start saying, actually, let's have a look at what would happen if we did multiple changes, not just if we changed our income. So we can go to income and earnings and say Peter's going to suddenly start earning, he thinks he can earn work for 35 hours a week. Well, that's probably going to change things straight away. And as you see, straight away after costs, it now is £183 he's in credit. I can go to budget. One of the things he might want to do is in terms of food and housekeeping. He might want to suddenly say he's going to give up smoking. £6 a day, I am told reliably, is less than a pack a day. Zoe's the expert on that more than I am. And so with that now, you can see his situation just by making 2 changes has been made things very much easier for him to understand. One of the things we can now look at when we go to reports, we can start comparing our scenarios. So if we compare our scenarios, we can see that from the situation in terms of the overall income, from costs, and from surplus or cash shortfall. So very visual ways in which we can work with people. And I think one of the things that Andy was saying is how useful the visuals are in terms of talking to residents and understanding their financial positions. So I've just flown through that. There's a whole load of other stuff that I haven't gone into. So at the top right here, we can talk about team management. So if you are looking and saying actually how many people in the team are using the software, you can look at it from here. So you can look at usage stuff. You can save cases and open up other cases. Look at usage information there. Team management, bring in other users and so on. The other one thing that very quickly just highlighted to me there is we also have some alerts. So for this particular case, for Phil, there's a number of things that are happening in this case, which is for advisors becomes very useful to talk about. You are better off under universal credit in this particular instance. You are suffering from the bedroom tax or the under occupancy. So you may want to think about what you're going to do about that. But you are maybe eligible for free school meals. So there's a range of things we can talk about there that are useful. If there are any questions or anybody wants to have the software on trial for a week or two, there'll be an opportunity to ask that at the end. But if there's anything else anybody wants to see, please let me know. But at that point, I'll probably better off handing back to Janet and Zoe to wrap up.
Great, thank you very much, Peter. Let me just take the presentation back before handing over to Zoe. Okay. Right. Okay. So I think you're going to do a quick canter through this as a kind of summary before we move on to the Q&As, will you?
Yeah, this was just to sort of draw together what I was saying earlier, and what Molly and Andy have been saying, and Peter's demonstration. I know that a lot of organisations out there don't have user calculators. Some still use pens and paper. Others use other calculators to specify their own. But I'm hoping that the discussion has allowed you to see what tools are available, however you go about getting those tools, and that they are so useful in that it allows you to move your resources to where they're most needed. And all the organisations who are supporting people, especially once UC rollout starts moving on a pace, I mean, exactly as Molly was saying, and Andy, that there are more people than they expected. It was quicker, the migration was quicker. But anything that you can do to help people, yes, anything you can do to spread your own resources, and some sort of calculator can really help with this. And this is just bringing together what the challenges were that we were looking at the beginning and how these can be addressed. I don't really want to say much more on it. We move on to we've got a poll next.
Well,
yes.
I'm thinking for the time, because I have promised everybody to be on the way for 11:30, and it's 25 past. So I think if we skip that poll, because Zoe, I think this might be quite an interesting point to the final thoughts.
Yeah, I'll just be very quick through this because I know there's a lot of questions have come in. Just some things to bear in mind, that although you're getting through the initial migration, things will continue to change. We're expecting further regulation as impact assessments become public and as different people move over to universal credit. And when transitional protection ends, that's going to be a period when a lot of people will require support. So mitigation and support measures will need to be ongoing, and not just for the initial transition. We're going to have to look at the impact on families with 2 children. We know that that's going to be a big drop in income. So support plans and for those will need to be in place before it happens. And I think the underlying message that we've heard from all the organisations is that if you can be there to support people, if you can target those who need support, you can seek to avoid crisis, and not just for the organisation, but specifically for the claimants.
Okay, great, lovely. Thank you very much, Zoe. Just going to, there's just a quick a slide there about some of our clients on there, but I just want to very quickly move on to questions, because as Zoe says, we have got quite a few in from you. And so first up, Zoe, I say Zoe, but Andy and Molly, do please jump in if you also would like to add to the answers. Zoe, what about somebody question? How have the rules changed to get disabled people into work?
Yeah, I think I'm under the legacy system. There was pretty good measures to help people move from ESA into work, and for example, being able to claim tax credits after 16 hours rather than having to work full time. With the taper of earnings that happens under universal credit, I think this is probably emphasised, and it's the linked periods are still there. So if people want to try working, they're going from the equivalent of ESA, they've been incapacitated for work. This is still available. We're trying to include as much as we can in the calculator so that people don't need to know all the regulations around this. For example, the offset of respite care on earnings, so that if people are a carer and their earnings are above a certain amount, that's offset. But I actually think I think the universal credit will carry on very much as legacy benefits did in encouraging people into work. And I know the government's announced in the budget that a lot of money is going into seeing what is effective in this area.
Excellent, thanks, Zoe. I have a question here from an attendee, and it's to do with direct payments to landlords. So Andy and Molly, you may be able to input to this one. And the question, I'll read it verbatim, so apologies if I miss nuances or whatever, but direct payments to landlords to continue if the tenant was in receipt of housing benefits. I've not heard, what does this mean? Will the tenant have a choice under the Scottish choices? The payment will just go to the landlord automatically, ? So any thoughts on that? Anybody? Zoe, Andy, Molly? Direct payments to landlords continuing.
Yeah, I think we're still waiting to see. I mean, they're just doing it via guidance. They're not doing it via any regulation. So I don't think we're going to have the Scottish choice of the 2 weeks. But it might well be that it can go one of two ways. Either there's going to be an assumption, if it's happening already, that it's automatic, or there's going to be an assumption that if somebody who is having direct payments at the moment asks for it under universal credit, that the need is there. My feeling is it's the second one. But we should be hearing any moment.
Great, lovely. Molly, you mentioned earlier about that very, you sort of called it an administration point about the payment of frequency or mechanism of payment being changed for direct payments to landlords. Am I right in that?
Yeah, like I covered before, it's just a different process in comparison to live service. And had we known that when we were sat on live service thinking, oh, we've got this stitched up, it would have been helpful, because it is a very different way to kind of manage the accounts. Because just as an example, say someone's payday was today, under live service we may have had a backs transfer through in the next couple of days, but under full service, essentially the housing element is deducted from their award, but we receive it in a 4-weekly schedule. So I think our last schedule we received at some point last week, we might physically not see that go onto the account until the back end of this month. So it's just something for people to be aware of. At the moment, that is just how it is. But it does make management of arrears and keeping kind of customers reassured that everything's okay it's quite a challenge if you don't kind of have a grasp of how that's going to impact on arrears balances. It's more like technical arrears. We know the money is coming through. It's just wait and see.
Yeah, it's a good top tip there. Andy, anything to add on direct payments?
Yeah, I mean, in terms of Solihull here, we had some issues, obviously at the start, because of, like the length of time and the like accounting for the assessment period and when the deductions start. So although we'd put a lot of APAs in place early on, then they're only just starting to come through in terms of receiving the payments. So we're seeing the third party payments increase from about 20,000 to 30 odd thousand now, as those get assessed really. But as Molly said, it is an issue because of the way that they're paid on a 13-week cycle, and Universal Credit is over 12 months. So we're just looking at calendars and things around that, because it is an area of concern.
Excellent. Thank you very much. It's brilliant to get your sort of from the coalface top tips and advice for people. I'm sure people found that very very useful, very interesting. I'm going to leave it there. I have more questions, and for people that have sent me questions online, I will have answered and said, if we've not got to you, then I'll email you after the webinar with answers from the panel today. I'm very conscious of time, and I want to just end on the note by saying thank you. Thank you very, very much to our guest speakers, Andy Jones from Solihull Community Housing and Molly Dunne from Your Homes Newcastle. It's been excellent, and thank you for giving up your time today. There are, just as I said at the top of the webinar, there is a short survey which will follow immediately after this webinar. And also one thing I didn't say is that the graph that Zoe showed, the chart, the roadmap of universal credit, it is available as a download in the panel on the right hand side. So please do get that as a download. You can download that there, along with a handout, a flyer, a bit more details about the calculator. So those two downloads are available for you there. And like I say, there's a short survey. We'd really welcome your feedback and a chance for you to just put your hand up and say if you want another look round the calculator with yourself and your colleagues at your own leisure. Please let us know. So without further ado, it just remains for me to say again, thank you to our guest speakers, and also thank you to Zoe and Peter from Policy and Practice. Our contact details are up here on the screen, and that's the end of our webinar today. Thank you very much for your attention and for joining us. Do take care. Bye-bye, everybody.
Thank you.
Thank you. Bye-bye.
Bye.